Hello all. Today we are going to see the basics of cash flow statement. We all know that cash flow statement is an important tool in management accounting or financial statement analysis. And today in this video, we are going to see the theoretical part of cash flow statement. Cash flow statement, first we'll see the meaning of that. That is, a cash flow statement focuses on various activities that deals with cash. That is, in a business organization, all those activities which cause a change in the cash flows, that will be accounted through the cash flow statement. So cash is an important asset for any business, and therefore the changes or the cash inflows and outflows that are happening in a business should be accounted for. So that is why the changes in the cash balances between two balance sheet dates are recorded in cash flow statement. So you are going to record the changes that are happening that are related with cash flows. That is, you will have lot of cash inflows and cash outflows, and changes in these cash outflows and inflows will be accounted in the cash flow statement. Okay, and it covers all items which increases or decreases the cash of a business enterprise. So all those items which will increase or decrease the cash in a business enterprise will be covered in the cash flow statement. And of course, it is to regulate the effects on cash of different types of cash inflows and outflows. That is how the cash flows are impacting. So later in the subsequent slides, you will see that the cash flows are divided into three types of activities, and what all changes are happening to these three types of activities, or what all cash movements are happening in all these three activities are recorded in the cash flow statement. And what is a cash flow statement? That is a statement which summarizes the sources of cash inflows and uses of cash outflows of a firm during a particular period of time. So you can make a cash flow for a particular period of time, but when we prepare it for or as part of mandatory disclosures, you will be preparing it for a quarter or for a year. Okay, so it's a statement which summarizes the sources of cash inflows and uses of cash outflows. So in short, you can say that all the cash inflows and outflows are shown in the cash flow statement, and it is prepared for a particular period of time. And as per AS3 issued by the Institute of Chartered Accountants of India, cash flow statement is a mandatory statement. That is, it's part of companies' financial reports, and therefore it is compulsory for all the listed companies to prepare the cash flow statement. Even otherwise also, even if it's not a company, even if it's not a listed company, in those cases also, most of the successful business enterprises prepare cash flow statements so they can trace in which all activities they are losing funds and are getting funds. So usually for financial statement analysis, this is a very good tool. And now the classification of cash flows. The cash flows are divided into three, that is operating activities, investing activities, and financial activities. So mainly the cash flows happening in a business organization are divided into three. Okay, so operating, investing, and financial. So you can classify the cash flows happening in a business under these three heads. Okay, so this is an exhaustive list of activities that can happen in a business organization. Okay, and one by one, let us see which are these. So first one is the operating activities. So operating activities or your operations means your day-to-day operations or the core activities in which the business is focusing. If the business is into textile business or all the transactions related with the textile business is your what? Day-to-day operations or the core activities. Okay, so those are the revenue generating activities. For getting an income, what all activities you are pursuing, that is known as the operating activities. So Operating activities are day-to-day operations or core activities, and mostly it is the revenue generating activities. So sale of goods and services is operating activities. All payments related with that particular core activity, like payment of wages, salary, insurance paid, all those expenses which are related with the main operations can be operating activities. And next is the investing activities. So investments here relates with the actual investments and the fixed assets or the long-term assets. So all the activities related with purchase and sale of long-term assets and investments can be grouped under investing activities. Next comes the financial activities. That is, financial activities means we have some idea. That is related with the changes in the capital structure or the total capitalization. Okay, so the activities related with changes in capital and borrowings. That is, you can infuse capital into the business, or you can mobilize funds from outside also by way of borrowing. So all activities related with changes in capital and borrowings will be grouped under financial activities. So cash flows in the business are grouped into three: operating, investing, and financial activities. And now, one by one, let us see some common activities that will come under each subdivision of cash flows. One is the first one is the operating activities. Cash flows from the sale of goods and rendering of services, that we have already discussed. That is, if you are selling goods or if you are providing services, then the cash flows out of that is cash that is related with operating activities. And that is cash inflow also. So cash flows can be of two types. Cash flows can come in or cash flows can go out. So that is technically it's known as cash inflow and cash outflow. So operating activities, cash flows from the sale of goods and rendering of services. And again, it's a cash inflow because funds are coming in, no? And next is cash receipts from royalties, fees, commissions, and other revenue. So that is also related with production, like royalties. It's related with production. You are renting out or you are allowing somebody to use your assets, no? And in return for that, you're getting some fees. That is known as royalty. So cash receipts from royalty, fees, commissions, and other revenues are classified as operating activities, and that too cash inflow because cash is coming in. Cash receipt from debtors and bills receivable. Sometimes you may not get the fund or the consideration at the time of sale itself. So you won't receive it. They may defer it and later only you will get it. So when you're getting it, that can be classified as operating activities. Next is cash payments for purchase of goods and services. So all these are payments. That is, whenever you're purchasing finished goods, raw materials, and all such things, when you are incurring payment, that's a cash outflow and it will be grouped under operating activities. Cash payment to creditors and bills payable. That is, in return to purchase of goods and services, you may have to make a payment. No, so cash payments that you make to creditors and bills payable are operating. Cash payment towards wages, salaries, and other payments to employees. So all such payments and all other payments related with operating activities can be grouped here. Income tax paid or income tax refund. Income tax paid is cash outflow and income tax refund is cash inflow. So this is not an exhaustive list of all operating activities, but just for you to get an idea about what are the usual operating activities. Some activities are given. You can find numerous other activities as well. Hope you are confident with this. That is those activities which will come under operating activities. Next is the investing activities. So as we have discussed, investing activities means your investments in fixed assets and investments at large. So the purchase of fixed assets, whenever you're purchasing fixed assets, it is cash outflow and that too under investing activities. Sale of fixed assets, it is cash inflow. So what you get, only the actual amount. If you are selling it for 8,000, that 8,000 rupees, irrespective of whether you sold it at a profit or loss. What you're getting, the cash component alone will be considered as cash inflow or outflow. So sale of fixed assets is a cash inflow. Next is cash payments to acquire shares and debentures of other companies. Suppose if you are investing in the shares and debentures of other companies, then cash outflow is involved, no? So that will be grouped under investing activities. Cash receipts from the sale of shares and debentures of other companies. Just the reverse of the former one. That is, you are selling the shares and debentures of other companies, then that is cash inflow from investing activities. Interest and dividend received from investment in other companies. When you are investing in the shares and debentures of other companies, you may get interest or dividend as the case may be. So that those are classified as cash inflows from investing activities. So interest and dividend received by you will come under investing activities. But if you are paying it out, that is related with financing of your company, no? So that will be grouped in the next activity only. So let us see which is the next one. That is the financing activities. So as we have already discussed, financing activities are those activities that changes the capital or the borrowing. So what all funds you are infusing for the running of the business, whether it be capital or borrowed funds, long-term borrowed funds, it will come under financing activities. So all such activities which will alter your capital structure will be grouped under financing activities. So examples are cash flows from the issue of shares or debentures, cash receipts from short-term or long-term borrowing. So when you are issuing shares or debentures, you are getting funds, and that is directly related with your capitalization. Next is cash receipts from short-term or long-term borrowings. When you are borrowing from banks or financial institutions, that will again increase or that will alter your capital structure. No? So that will come under financing activities. Cash outflow on redemption of preference shares or debentures, that too, because you are paying it out. Again, alteration of your capital structure. So you are redeeming it. So you are paying out. So cash outflow from financing activities. Repayment of loans. When you are paying back the loans borrowed, cash outflow. Cash payments for buyback of shares. Your equity shares may be bought back by you. So in that case, cash outflow. You are buying for the sake of cancellation. Dividends paid. When I told you in the when we were discussing the further slide, when we discussed the investing activities, I told you dividends paid by the company will come under financing activities. But if you are getting dividends from investments, like when you have invested somewhere else, that will be categorized as investing activities. Next is interest paid on debentures and loans. Same way, that is when we are paying out interest payable on debentures or loans, that will come under financing activities, cash outflow. Share issue expenses, that is directly related with raising of capital, no? So share issue expenses will also come under financing activities. So hope you got a rough idea about the theoretical idea regarding the different cash flows happening in an organization. So with this knowledge, we can further advance to the next level. That is, we have to classify the activities by real life examples, and then you can work out the problems. So in the next slide, we'll see the format. Sorry, in the next presentation, we'll see the format and practical problems. Okay, thank you for your patient listening. Have a nice day.